Hello guys and welcome back to another CY Mood Academy video. Trading is not a simple and immediate activity. It is a long journey, made of study, sweat, monetary blood spent every time you make a mistake. It's a lonely path that involves not only our bank account, but also our most hidden inner part, awakening fears and affecting our mind. Every mistake you make is a source of pain, but no one becomes a capable trader without going through this path. Today we are going to see some of the mistakes you will surely make as a noob trader. The first mistake you may run into is to do too much or too little paper trading. Here you have to understand what you are like on the psyche level. Paper trading is a training system for traders that consists of creating sales and purchases on paper, without real money, to train and understand how it works. But paper trading lacks a fundamental component, that is anxiety about using real money. On a paper trading account we can also have 100,000 and more euros invested, but not being real money, your behavior will be easily swaggering and arrogant. Zeroing the account will not be a problem. Zeroing the account by doing paper trading is not really a real problem, if you analyze what and why it happened. The best thing to do would be to switch to real money trading as soon as possible, with small amounts of money, to start getting used to managing the tension of maintaining your position in the market, and managing the emotional waves of seeing the value of the purchased asset grow or fall. More paper trading could be useful for those who are braver and more bettors, while a more shy and calm person could leave earlier due to their less aggressive nature. Another mistake that comes from the first is exaggerating the size of the position. Because there will come a time when we will be so sure of ourselves and our analysis, that we will put half of our portfolio on that stocks that we are sure will rise. And then after a short time we'll see it sinking and we'll panic completely. At this point we will have to decide to face the pain of losing money and losing our beliefs, or hold the position ignoring what would be right to do, turning a short-term trade into a long-term investment without having any idea when it will be disinvested. This error also brings with it the anxiety of having a lot of our money invested in one position, anxiety that will be present even if our position will be positive. In fact, the anxiety will most likely cause us to leave the position much earlier than we should, making us take home little money. The second error is related to the third error, which is not having a trading plan. Having a trading plan means having an idea of what our profit and portfolio protection goals are. It seems obvious, but it is not, and above all, having a plan helps us to discipline ourselves in the markets. In fact, planning protects us from another mistake, which is overtrading or exaggerating with taking positions. It may happen in fact that after a series of particularly good and profitable trades our ego pushes us to risk more and more, in the belief that we are very good and we cannot make mistakes. If all the trades before have been positive, even these will certainly bring us to a step from wealth and happiness. On the contrary, in fact, our ego is one of the biggest enemies we have, because it diverts our vision and perception of the market and endangers our account. Emotion is a mistake that we will always pay with a lot of money. Being cold and focused means seeing things as they are and not as we would like them to be. Emotion is the enemy of victory, especially when it leads to greed. There are situations in which settling is the right choice. In fact, the emotionality will ensure that we will still be inside the trade that we have to sell, losing all the profit and going to lose. The emotionality leads to what is called FOMO, fear of missing opportunity. We think that it is an unmissable opportunity and we throw ourselves headlong without thinking about it and without analyzing, and then end up making a mistake that cost us part if not all the trading account. The FOMO is that illogical and illusory push that deceives us. Think about when prices are high and people who know nothing about it enter the market, buying pushed from the mass media report. Think about when your hairdresser tells you to absolutely buy that specific stock and that he was good to have just taken it. Nothing against hairdressers, I own a Mazda Miata 2 and some people know even more about it than I do, but if your hairdresser doesn't know anything about it and tells you so, this is a great example of FOMO. When you are caught up in emotion, you don't have to sell or buy. You have to study, update, train but not trade. Emotion equals loss. You have to follow your take profit and stop loss. If you have put them and you are not totally stupid, there will be a reason, and if you have put them without a sense, you are perhaps just starting out and can even be there. Put them in knowingly and not following them, that's stupid. Stupidity is loss of money and loss of money is pain. Be careful, study the markets and study yourself. See you next time. Thanks for watching. Please subscribe and share our video to spread our knowledge. And remember to check all the product made for you by the CY Mood team.